All right, all right, all right. Aloha Friday, everybody. Thank you for being with us this afternoon. I am so happy to be with you. We are celebrating Hispanic Heritage Month, and believe me, we'll take it past 30 days because if there's anything Hispanics can do is party all year round. But thank you for being with us today. We're going to be speaking about a very important topic with my friend Arnaldo León. He is amazing when you're talking about financial education, financial footing, getting yourself in a position where you will not only be able to manage your own in this life, but manage the future of your family financially. So, Arnaldo, mi hermano, thank you for being with me today. Welcome to Aloha Friday.
Yes, Enrique. First of all, thank you for this wonderful opportunity. When you reach out about the Aloha Friday Hispanic Heritage, I was like, I'm down. Especially when it comes to financial education, because especially in the Latino community, that's a topic that we don't want to talk about. We know how to work, but we don't want to talk about tomorrow. It's about what can we do today. So thank you for having me. And it's gonna be a pleasure to share many strategies and information with everyone here.
No, thank you for joining me. Thank you for accepting. I know that in the Hispanic community, as you just said, finances is seldom brought up, primarily because we don't have any. So, but secondly, it's because my parents did not have a healthy relationship with money. They did not have a healthy relationship with resources. It was come in and go out, right? And that's what happened was that they gave birth to a cascading effect of, hey, now my children are going to treat money and resources the same way they saw their parents do it. And somewhere along the line, you have to learn the lesson, right? And I'll tell you that I am personally one that am still at times battling the unhealthy versus healthy attitudes and mindset around finances. There's been times where it's, raining money and you're like, yes, all right. And then there's times where that rain didn't supply for, X amount of months or whatever. But today we're going to get into a great conversation that should educate all listeners. So thank you. If you are joining us on LinkedIn, please let us know that you are so that we can greet you. If you are on Facebook or on YouTube, please let us know that you're joining us so that we can acknowledge you as well. So before we get into all the financial goodness, Arnaldo, tell us a little bit about you, and then we'll get into all of the education piece.
Yes, sir. Before I go into that, I just wanted to talk a little bit more about what you just mentioned about the family, right? So on the family, sometimes when we're just seeing our parents, how they're doing, and we think that that is just that we're gonna have the same life as them, and we get to a point that we're gonna get so used to it that we get comfortable, right? So something that I encourage everyone to do is read books about financial literacy. So this is a book that I came across that I'm sure most people know this guy, Tony Robbins. But on this book, he talks about many things, right? So, but I wanted to share that. So who am I? My name is Arnaldo León, originally from Puerto Rico. I moved to Florida in 2018 after the Hurricane Maria. Back then, I was, like once you are a security consultant, like you're always a security consultant because it's a chip that you cannot turn off, right? So, but back then, I had a security agency in Puerto Rico, and I had the pleasure of serving the entire island. I had about 200 employees and around 30 to 35 clients. So I was kind of busy. I was always, in the in the position of serving and protecting others, right? So, and after like 3 years ago, I made a shift about, to enter the financial space, where now I'm bringing all the skills about how to serve and protect others, but now I'm doing it on the financial world. And something that I saw, is the need for financial education. So once we are owners, business owners, we tend to delegate, well, because we have the money, we have the resource to just hire people, right? But once I got into this industry, I gotta tell you, it was mind blowing. With all the information, every little detail that we as owners, we are not on point. We because we are so used to delegate others that when we are only saying, hey, how much is it? Boom, here you go. That's it. But what about the learning experience? So it is important to know the fundamentals of finance. When today we're going to be talking about mostly about risk management, but we're also going to be talking about tax strategies, and also estate planning and alternative investments, like how you can grow your money without taking so much risk.
And that's wonderful points there. But and thank you for covering the piece of the parent child relationship when it comes to money. And I'll tell you, it starts there. We don't
Yes.
know anything about money until we see our parents handle theirs.
Yes.
Sometimes it's great. You're like, wow, we can do this. Wow, we could do that. There's no stress. Oftentimes is, I don't have for no money. Don't be asking me for nothing. Don't don't even blink at something because we ain't buying it. And you're like, well, hold up. How come Jimmy got and Susie's got and I can't even blink at it? And
Yes.
so those are two drastic extremes of parenting and relationship with money and the examples of it. But it is what we see. I already mentioned that I grew up viewing basically scarcity. I lived
Yes.
in a scarcity environment where what we had was what we had, and that was it. You had a loaf of bread, you had to make that last 30 days. And it's 30 slices. And you're like,
Just one bite per day,
what? What? Cut that in, and so that relationship with finances or resources is what we get to see, and then that's what we learn until we get into a position where we are fortunate enough to get with education. Now, I
Yes.
want to start there because that education started with my family, whether they liked it or not, or whether they intended to educate me or not. That's how I learned. But they did not have the big Tony Robbins book. So let's talk about the education piece and what could we do as parents? What could we do as business owners? What could we do as individuals on the education side to get us ready for a healthy relationship with money?
Yes. So I guess that the first thing would be, creating a budget. This is, finance 101. A budget. A budget is so important, and that every time I sit down with a client and we're going about, of their needs and looking at their finance and everything, I'm seeing, that they're making good money, but when it comes to the cash flow, it's very tight,
Mm,
right?
sure.
So, and when I see that, I'm like, okay, so let's break it down. Tell me your monthly expenses. Tell me, all your subscriptions. On the subscriptions, like most people have a lot of programs, platforms, Netflix, Hulu, Disney, like all of this, all these companies, and sometimes they don't even have that time to watch them, right? So why are you paying for a platform just to say, yeah, I have it? Every now and then I get the time to watch something. But that is money. That is money that is coming from your pocket, from your paycheck. You're working hard every week to give out $10, $15 to someone else, and you're not gonna take advantage instead of using it for your own self, for your family. Like, no, let's be aware of how we are using our money. A lot of people, I have seen this going around, money consciousness, right? So money consciousness, like you gotta be aware, of of everything that you are getting, like every paycheck, every dollar, you gotta put a name to it. And in the finance world, we have a very basic method when it comes to budgeting: 50, 30, 20, right? So 50 is basically your monthly expenses, the fixed one, right? And we're talking about rent, electricity, water, cable, if you want to put cable there, car insurance, home insurance, like everything that is fixed. Because and that is 50%. Believe me, I have seen people that when it comes to monthly expenses, we're talking about that they are 60 to 75%. So just to give you a perspective on that. So that means that if the person, hope that never happened, but hey, sometimes it does. Two tires blow out. Depending on the size of the car, on the wheels that you have, that's gonna be easily $400. So if you're already using 75% of your entire month just to pay the month expense, when something like this happen, you're gonna go into debt right away. And that's the thing that we're trying to prevent with this. It's about to educate you and give you the tools for you to be able to, maybe not immediately, because this is not a get rich quick scheme. This is not about that. It's about education. And the first thing that we all should be aware of is where we are today. Like there's no wrong answers on this. If you are negative, 300 or whatever on your monthly, on cash flow, that's okay. You can make a decision today to change it. You can, because you have the capacity, and you have the tools, the needs. You have Enrique, you have myself over here to assist you on how to get in the right path to, financial success. But I will tell you, it's a marathon. It's a long journey, and a journey that you cannot see, like a deadline to it. It is something that you have to do every day, because at the moment that you stop paying attention to your finance, that is the moment that you're going to lose control. And some people, when it comes to the credit cards, I mean, don't get me wrong, I love the points. you know I'm always using the credit card for everything. But try to control it, because again, if you only have one income stream, you gotta be very careful with how you use your money. So budgeting is number one, because that is your source. Number two will be to create a plan. Like, okay, this is how much I am making, but what is my ideal income? Income, right? Aquí estamos metiendo el español con el inglés un poquito, así que.
Dale ahí.
So we're gonna do it the Spanglish way. So that's why we are on the month of Hispanic heritage, all right? So tenemos the budgeting. Then we have creating a plan, because there's a saying that said that the other day I was with my estate planner. We were talking about different strategies, and it was about, if you fail to plan, you plan to fail, right? So that's number one, is having a plan. This is your finance. You put everything on paper, because the moment that you try to do everything on your mind, you're gonna go into a loop. It is better to always have paper, and you put everything down so you can see where is your leak, where is your problem, or what thing can you change to make it better. So we have the budgeting, we have the plan. And then is, if you don't know the information, find someone Find a professional in the area that you're trying to grow, to expand. If that is on finance, want to to your accountant, to your CPA. But I would tell you this about the accountants and CPAs. I love them, I work with them, but I would tell you this: when it comes to an accountant, remember you are the one paying them, right? They are the expert, no doubt about that, but you are paying them. So do not think that because when they have the information, they will tell you how it's gonna go. All right. So you are the one paying the accountant, paying the CPA or an EA, which is an enrolled agent. That could be someone that it is considered as a tax planner, right? Like at the moment that you're paying them, tell them your expectations. Tell them, hey, listen, I'm trying to do X, Y, and Z. Can you help me? And don't take like a yes, yes, I can do that. No, no, but tell me, can you break it down for me? How is it that you're gonna do it? Ask them those questions. Why? Because in my experience as a business owner, and it is what it is. I'm gonna say it. Most accountants and most CPAs, they are not proactive. They are not proactive. Basically, what most accountants and CPAs, what they love is cash flow. And what is cash flow for them? Tax returns. That's it. So tax returns is an easy way to build the book of business and to increase the cash. It is very simple for them. But if you are someone that needs like more education about budgeting, tax planning is very, very, very important, especially if you have a business. Something that I have seen is that on my security agency, my payroll was between 60,000 to 75,000 every other week. And you know what? I hated the most, like calling me on a Thursday or a Friday. Hey, Arnaldo, next Wednesday you gotta pay 35,000. Like what? Like, hey man, I got a payroll. Like no. So when you are in when you're in that phase of making a plan, and you're trying to find someone that is the right fit for you, ask them all the questions because you are the boss. They might have the credentials, but you are the boss. You are paying for their services. Obviously, they're gonna have a time around, to give you the information because you're not the only client. So it works in both ways. Well, you're the boss, but you're not the only one. All right. So be patient with them, is especially if they are big. So we talk about budgeting, we talk about plan, we talk about finding the right professional for what for whatever it is that you're looking for, and that could be finance, that could be a financial advisor. If you have assets at that point and you're not and you're not being treated right, hey, shift. Not because that person is your family, not because that person is your friend or whatever, means that you have to stay there. This is your money that we're talking about, and you are in charge of every penny. All right. So we have the expert. Once you have the expert, it's about execution. They're gonna tell you a plan on what is it that you have to do. Follow it. Or in this point is where I see like many mistakes happen, because you go to the expert, they give you the advice, they give you the plan, and then you don't follow it. Like, hey, they are giving you the formula. Like, take advantage. Do not take it for granted, even if it seems that it is something that it is something so simple. Do it because like, let me ask you this at this point: if you receive the information, before getting the information, the plan that you have to execute now because the expert give it to you, right? So now, what if you don't do it? Whose mistakes or fault is it? Is it the professional or is it yours? It's the same concept when it comes to the gym. If you go to the gym and you ask for a personal trainer to help you, lose weight, get big or whatever, then they are gonna tell you what is it that you need to do. It is up to you then to commit to it. So this is a relationship, as I say, 50-50. I give you the information. Now it's up to you. Like, what do you want to do after this? So that will be something that that we encourage people to look at and to start with.
Yeah, definitely a good plan to have. And I saw that Crystal, thank you, Crystal, for being with us. There's quite a few folks with us today. Thank you for joining us. I can't acknowledge you unless I see you in the chat there. But Crystal said it is beneficial, and I'll throw that up there, to talk to a person that has the financial success. So much that you want to see yourself in the future. And it's absolutely critical to obviously get advice or guidance from people who are actually doing it and successful at it. So thank you for that comment. But to your point, you could have all of those in play. There is nothing that's ever going to be done if you don't do it. No one's going to do it for you. And I guess if you had enough money, you could have somebody do it for you. But guess what? You still don't absolve yourself from the responsibility, right? That
Yes.
that accountability is still belongs to you. So let's say everybody else that you hired to run your show messed up. They're not going to really go after them. They're going to come after you. And so
Yes.
since that belongs to you, it's up to you to make sure that you take that education, that you take that relationship with a professional, and you take that plan and you execute it, because it's really in your court. So now let's say we got all that in play. We're sound financially. We have the right plan. We have spoken and put in play people who are professional in what they do. And now we are ready. We're ready to execute this thing. There is, well, let's just say this. You could have all those in place and still not become wealthy.
Yeah.
And so let's talk about the difference between operating normally day to day. You can pay your bills, no sweat off your brow. No one's coming for you because, you don't have debt and credit cards and things like that, or you have them, but you use them wisely. Uh, and the person that takes that a little extra and gets into these things called like life insurance, external revenues, things like that, because there's two different ways. I mean, you could be really bad off, you can be really well off, and you can start building wealth for the future. So let's talk about the two differences between those two people.
Yes. So I guess that once you have all of that in place, the first thing that we should do is risk management.
Mm,
And this is going to be about insurance, right? Especially if you have children, especially if you have mortgage, and if you have a business, right? So because like some of us, we think that it is just enough to work hard or to have two jobs, right? To pay the bills and to have some type of lifestyle. But what about tomorrow?
mm,
Tomorrow is uncertain, you know. So, and especially if you have a family, that you talk about the dreams, the goals for the family in the future. If you have kids, like, hey, I would love to see you studying at X, Y, and Z. I would love to see you, making that dream true, So, but what if tomorrow the provider is no longer there? What
mm.
if? Like, what then? So risk management, life insurance, that is where it fits. Risk management, life insurance. So I always tell people, because to be, I'm gonna share a personal story related to life insurance. I remember When I was, I think it was 21 years old, something like that. My father, he invited me to this meeting, and it was a meeting with someone from my insurance company, and he was basically giving me a life insurance for myself. And at that moment, so I was like, life insurance, like, wow, my dad must be rich. you know I was like, wow, like life insurance, because at that point, before that, like, we never talk about life insurance, but I have seen it before, right? And I knew that, my thought for it was that life insurance was only for the wealthy. That was my thought. So when I'm in that, one meeting that my dad is talking about putting a life insurance on myself, and everything, I'm like, wow, so we're rich, and this guy, he's playing it cool.
Mhm.
I'm thinking, like, man, like, show me the money. but no. And obviously it was years later that when I moved to Florida, you know um, I was calling to cancel the policy, right? But when I called and they told me, well, you have this much on the cash value, I was like, wait, what? How much do I have? 18? What? 18,000? Can I take it? Yeah, it's yours. I was like, so do I have to pay it back? This is the question, right?
Uh-huh.
Well, we recommend that you pay it, but if you don't pay it, then obviously it's gonna be discounted from the death benefit. Like, okay, cool. So I take the money, I buy the car in Florida, and I just leave it there. That's it, right? But when going back to that, when it comes to life insurance, when we tend to think that it's just for the wealthy. I have been able to, because I am independent. I am an independent broker, so I have access to 90% of the companies that exist right now. And because I'm independent, I don't have to push any company. I don't have to push any product. When I sit down with someone, I'm looking for the best option. In some cases, I have provided two type of companies to the same client, because if they're looking for a term, hey, let's take care of the the protection side of it. If tomorrow something happened, all your family is gonna be taken care with this amount. And if nothing happens, during your entire life, we're also gonna be building, on the cash value side of it, money to supplement your retirement, which you can access tax free as well, right?
Yeah, talk,
So,
talk about that. There's a question here, and I'll throw it up from Crystal. What about the people that are retiring from the military or medical retirement?
well, that is a very specific question. So I'm gonna treat it as someone, that, like a civil, right? It's the same thing, because when it comes to insurance, the insurance is based on your age and your medical condition. So whatever is that you have, then that is gonna set the bar for the monthly premium. So obviously, something that I have seen, and right now we are working with a client, and she's 300, 320 something pounds. We are working very, very hard to get a company for her. Why? Because when we're doing the underwriting, we're calling all the companies to verify, like, hey, I have this client, with these needs. Can we take care of them? And the moment that I say, the weight, I was like, sorry, our maximum is on 288. Our maximum is on 38. And I was like, man, like, how I'm going to do this, right? So, and the benefit of being independent is that, what I'm going to be, what I'm going to need to do is to call companies that I still don't have, in my portfolio, to verify if they can take them, so then I can get, contracted with them and serve my client. So that's the benefit, when you are talking with an independent broker, that it's not gonna be just X, Y, and Z. It's gonna be the whole alphabet. We're gonna go and do our due diligence, calling every company to make sure that everyone. I mean, I would love to promise that we're gonna take care of everyone, but sadly, we cannot. Because of the medical, situations.
Right,
But
right.
we have a program. We have a program that is not a life insurance policy, but it's more as an assistant funeral membership. So it is something that, as long as you're not on the terminal side of it, they are gonna help you to at least cover your funeral expenses. But when going to the question, it's gonna depend on the exact medical condition. So if the person later on would love to ask that question, it's gonna be my pleasure to find a solution for them.
Yeah, definitely. So, Crystal, if you wouldn't mind connecting, Arnaldo is on LinkedIn, so you can connect with him, and you can, get to the center of your current situation. But when I went, and I'll give you an example, when I went to inquire about insurance, the very first thing they say, hey, how old are you? Right. And so they took that, because what it is, hey, they got a chart, and it says, hey, he's 50. Hey, he's healthy or he's not. And then they go down to, the pecking order, right? It's like, if you're 50, you already know you're going to pay, right? Because you're on this side of the fence. But if you're healthy, completely healthy, yeah, you may last another 50 years.
Yes,
Nobody knows.
completely.
So that they take that into account. But age does have a lot to do with it, folks. So the earlier, like you said, hey, my dad took out a policy. I'm I'm looking to take out a policy for my children so that they can have that cash benefit. But yeah, the earlier they get it, the
Oh, yeah.
better it is, right? And
There
so
it is.
that's the way it is. So all right, so now I get from being financially stable, and I start considering, hey, I really need to get um this life insurance, not only, and I want to make sure that people understand, life insurance does not only have to mean payout at death. And that's what I want you to really get into here, because there are differences in the types of insurance that you can get, where you can secure your family, right, with a death payout. You can secure your family because now you're gaining something while you're alive, right? And also, you can set up a structure where not only do you enjoy what you have today, not only does your family enjoy a future when you're gone, but you can literally set this up where your entire line can, for a while, benefit from your decision today. So take us through what that looks like.
Yes, and that's a very good point. And thank you for bringing it out. So life insurance, we have the life, like the word in it, right? And I get it. Like back then, maybe 10, 15 years, that was the only benefit that the companies were offering. Terminal illness. Like when the person passes away, the family will collect a check, right? So in this era, we have living benefits. So that means that if something happens to you, like a medical condition, and some companies they also offer an accidental type of coverage. So if something happens to you, then you're gonna be able to access a portion of the death benefit, which you can use it, want to possibly, pay the nurse, depending on the amount. You can also pay the rent if you are, if you cannot do like 2 things out of 6, and that could be, if you cannot stand up, if you cannot, walk, if you cannot eat, if you cannot dress yourself, if you cannot go to the restroom. So if you cannot do 2 out of those, then hey, you're allowed to access that portion being alive. So and just to give you, an idea on the conditions that it covers. So we're talking about cancer. We're talking about, like stroke. We're talking about Alzheimer. Like these companies, like these companies now, they are now including more like medical conditions because they are trying to be open to everyone, but you gotta make a decision. I always tell people like, hey, listen, you have the information now. What would you like to do? Well, let me think about it. No problem. I'm an educator. I'm gonna give you the information. I'm not gonna be like, oh, but let's do it now, man. Let's do it now. No, like, listen, I have come to a point that I love to educate people and to educate them enough to make an informed decision. But I cannot be the one making the decision for them. It has to be like something that you see the value, that you say to yourself like, listen, I know that by having a life insurance policy, I'm going to have that peace of mind that I'm looking for. Like every time I go out, I know that if something happens to me, my family will receive a check saying, hey, family, I love you, this is for you. Sorry that I could not be here, but enjoy life. Because something that we can never help, that will be on the emotional side. Like the emotional side will always be there. That's something that no one can take that from you. It is what it is. But on the financial aspect, we can do something about it. If you don't have the means to get like a permanent policy, then hey, get a term. At least get a term. To, especially if you have children, if you have a mortgage, like you need it the most. Because if tomorrow something happens, what then? Right, like who's gonna take care of your children? Or if you let's just say the husband is a provider, and we have the wife is a housewife that takes care of the children. So this is a something that I went through. When I had my own, I had like an amount for myself, and for my wife, I had a lower amount because I was thinking about, well, why I'm gonna pay that much for her, because either way it's gonna be my money, whatever. But then when when the person that I was talking with, they tell me, but let's put everything on the table. You are the one that goes out, you work, and you provide the money and everything, right? What does she does? Well, she's a driver. She takes the kid to the school. She's a chef. She cooks for everyone. She basically is everything. She's the one that takes care of the home. So think about those positions that maybe because you're not paying doesn't mean that she's not bringing any value. So when I saw that into perspective, I was like, no, that if something happens to her, I'm gonna need more money. I'm gonna need more money, because at that point I will have to stop working so much to do all of that, to take care of my kids, to take care of the house, to do everything. So I always, always suggest, because that's the only thing that I could do. Suggest. I cannot say you gotta do this. I will always suggest, give you the opinion and the free will for you to choose. But I will always suggest the best option. I will suggest like, hey, listen, you guys are a couple. You both need each other very much, right? So the housewife, not because you are not paying for her, means that she, like, you're the only one that is bringing the value. No, 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 no. Like both bring a lot of value. And I would say, the woman, they are Wonder Woman. I will give my respect, especially to my wife, because she does a lot of things that if you put me in her place, I don't know if I would last, a month. So I love, being out, working and everything, but it really it takes a lot to be, a mom. So my respect for moms. So but going to that, everything comes to, to making a decision at the right moment, for sure.
Absolutely. Now, folks, we've been talking about financial footing. At first, we covered what you should have: a budget, a plan, a professional to help you with that journey, and the commitment, right? The commitment to be financially stable, financially healthy.
Yes.
We just covered the insurance option, or the insurance part of financial stability, because the fact is that we're all going to be gone. Look, I have a dear friend that I did not know got into a car accident until today.
Wow.
He was this close. When I mean this close, I mean this close from being permanently paralyzed.
Wow.
He is a husband, father, business owner. This close over this last couple of days. That's how easy and how vulnerable we are as
Yes.
humans. That at an instant, someone's misstep on the road could have either landed him permanently paralyzed or killed. Now, thank God that none of those two happened to him.
Amen.
He did suffer some injury, which he will have to recover from, but he's not paralyzed and he ain't dead. So that's the grace of God on his life, and I thank God for that. But that's how easy things can change for us. And so the financial footing is great, and having a good head on your shoulder and having a great financial relationship, a healthy relationship with money is all great and is the starting point. But now you have to start planning for the future, because this
Yes.
will happen. A good person to guide you through that period of how do I set this thing up, what's best for me, and how can I do that, is Arnaldo, and I encourage you to connect with him so that he can take some time and show you what it looks like for you.
Yes.
Now, so let's go into this tax thing, because I know that as we go through, and we mentioned taxes earlier as business owners, but there's a tax incentive. There are tax benefits that go hand in hand with some of these policies. Let's talk
Yes.
about that.
Yes, sir. So, and I'm gonna talk first about, you know um, a story back on 1980. Back on 1980. And I'm gonna take you back then when the IRS wasn't involved in the insurance industry. So back then, the insurance wasn't, like at that point, hadn't regulated the industry. So at that point, there was a brokerage, EF Hutton, I think it is, and what they were doing with their, clients, because of this was a brokerage firm. There was that they were a wealth management company, right? So back then, this guy is basically shifting the money from investments to life insurance, right? To cash value life insurance. And at that point, back in 1980, some of the clients, they were paying 500,000 into a $50,000 policy. So the first thing is like, that doesn't make sense. Like, you're putting 500,000 into a policy or 50,000. Like I don't get it. Like it's like someone is offering you a house for, just to throw a number, 100, but you want to put 1 million. It's like, why are you doing that? Because the house is like the value of the house is 100,000, right? So in this case, the policy was 50,000. So there's a reason for that. So, and I'm not saying that a life insurance policy is an investment product. It's a life insurance policy, right? So, but the life insurance policy has a component, very, very attractive, compound interest. And the beauty of the life insurance, when you use a cash value policy for, for this type of strategies, you have market protection. So that means that, the money is growing inside of it. It's not linked to the market. So you have that protection. So the money is gonna grow. If we're talking about, a whole life, it could be maybe 2% to maybe 4%, on compound interest. If it is an index universal life, it could be between 4% to more. Sometimes some indices has, a cap. And I know that this might be a bit tricky, with information. I'm gonna try to keep it simple. But there are different strategies that you can use within the index universal life, but it can give you, like way more than 10%. It just depends. Obviously, this is not in promise because it's an index universal life. It's not guaranteed as the whole life, right? So, but when you put like this money, like, going back to the story, EF Hutton, 500,000 into a $50 50,000 policy, like the money is basically growing. So there are two reasons why you should have a life insurance policy. One should one could be just for coverage. You want to have some type of coverage, in case something happens tomorrow. But then the other side is the tax benefit. Like, you could use the policy to accumulate cash, right? You can use it for that. But the cash, as I always tell to people, is that you need to be approved. That's why, one of the main reasons, right, that we cannot call it an investment, because, an investment is something that you tomorrow you go, maybe to your bank, you get a CD, you get an IRA, or go to a brokerage and you get a 401k, whatever, the product is, you can go and open it tomorrow, right? But when it comes to life insurance, you have to be approved. So, so the beauty of this policies is just that the money grows, and if the market, takes a hit, you're gonna be protected from the market. I'm talking, right? Same thing with the annuities. Annuities is offer the same type of benefits. The potential of the market. Obviously, you're gonna have some cap. Same thing with the whole life. Some annuities, they are fixed, but on the index side of it, some could go a bit more. And when it comes to the taxes, there are many ways, for you to get into, or reach to the 0%. And this is something that I have learned from David McKnight. Someone that I admire. I see him as a legend from the industry. Same as Tom Heckner and Van Mueller. Like, for me, like those three right there, are my, like, oh man, like this guy, like they're great. So if you want to look more information about everything that I'm talking, you can also go and look them up. They're gonna be a good source of information. So, and when it comes to the tax, to the tax strategies, it depends really what you're looking for, right? So if you're trying to just, have a tax deduction, then hey, the 401k is a great product, and something that I learned from the book is that, back then, I'm talking about, like, I don't know, maybe in 1980s, 70s, something like that. The stock market was mostly, was used mostly by rich people, right? So, and for the average American, when you talk about, hey, why you don't invest in the market? Oh no, that's too risky. But when they sign to a job, the HR comes to them, hey, you gotta sign all this paperwork. And it's compliance, hey, what is this? That's your 401k, I'm signing, if you don't want to like put much, just put conservative. That's gonna be okay. People are buying into that, right? So they basically, by putting it through the employer, they are removing like the fear of investing in the market. So people now are investing in the market. Some might say, no, I only have a 401k, but how is that money growing? Based on the market. So your money is in the market. So every time, the market takes a hit, then you're gonna lose the, a portion of your balance for sure, right? And it's very important when it comes to having any type of retirement account, a 401k or an IRA, that you are paying attention how the money is growing. It is important to stay in contact with your financial advisor so they can help you make a better decision. But know this, something that I have seen when it comes to the taxes and when you're using this type of products, there are many fees. When it comes to life insurance, the other benefit that has is that you're paying basically for the cost of insurance, which is gonna be very minimum if we go and compare it. So this is something that I saw right here. This is just a list of all the possible fees that a 401k can have, right? So it is important to ask the questions about like, hey, can you show me all the fees? Because I was reading into something that through your lifespan, it can take between 40% to 60% of your entire portfolio just on fees. Because remember, when it comes to having something like that, you're paying 1%, of the whole balance through the entire year. Even if you win or lose money, right? It don't matter. You still have to pay. But when it comes to tax strategies, that's something that why some people use the life insurance policy. Also, there is a couple of concepts that most people have heard. Infinite banking, become your own bank. Most people, the ones that are using the policies for cash accumulation or to invest. So you are your own bank. So instead of going the traditional way to your own bank, and let's just say that you have 50,000, but you want to get another 50,000, then you go and you get it next month. You gotta pay. Secondly, you gotta be approved by your credit score. So if you don't have the right credit score, you're not gonna get the money, right? When it comes to the policies, you can ask for a loan. And right now, with the companies and yeah, with the companies that we have access to private hedge funds and companies that they can give us a loan rate of 3.5. So that means that if you have 100,000 and you take out, the 100,000, you're gonna pay 3.5 percent for that. And now let's just say that we help you now because we also have alternative investments. Right now we have something that is paying a guarantee percent of 19% guarantee fixed return of income of investment, right? So if you take that, you take that 100, you pay 3.5, but you over here you're making 19. That's profit, and you can pay it. When it comes to the policy, you can pay it whenever you feel like. What I always recommend, hey, pay it like you were gonna pay the bank. Treat it as that, especially if you want to use it multiple times. So do not think this strategy as like infinite banking I'm talking about right now. Like, okay, so I get the money and I will never pay it back. Like, yeah, like you need to pay it back because so and how it works when you do a loan, it's against the death benefit, right? But this doesn't mean that you're gonna have access to the entire death benefit. The death benefit, most of them, I mean, like everything, basically is for medical reasons. What you have on your cash value is the amount that you have access to. But yes, so when the policy, the life insurance policy, the cash values are a great way to not just use it to become your own bank, but also to use the policy as a collateral. So obviously, we all know Walt Disney. So Walt Disney, and we know the story that he went to many banks to ask for a loan to build what it is today. Disney World. So, and the way on how he did it is because he put the policy as a collateral, right? So we have a strategy for that, which works same thing as a reverse mortgage. So reverse mortgage, for anyone that is very familiar with real estate, it is just a way. I think that it is an option when you are over 65 or 72, something like that. That basically the bank will give you the value of the home and you don't have to pay it. Obviously, with the promise that when you pass away, the house keeps, I mean, the bank keeps the house, right? So this is the same concept. So on this one is that, the first 2 years, the client will pay the policy, the annual premium. But after that, we're gonna be using, I love my real estate professional that they love using this word OPM, others people's money, right? So in this situation, we're gonna have the bank paying your premium until you pass away, right? So, but with the promise that when you pass away, they are the first one getting paid, then your beneficiaries, right? But this is a great strategy for anyone that have some type of money, accumulated, ready to invest. This is a way for you to see, like, hey, I would love to know more about, let me go back. The strategy is called RBM, reverse banking method, right? So with this strategy, if you have money, if you have 25, you have 50,000, 100, whatever that is, instead of just going out and invested into a real estate property, let's talk so I can show you how it's gonna look like doing the RBM. Because for some people it might make sense, especially if they are thinking about doing in a strategy to buy a property to get rental income, right? So, but when you invest into a property for that, purpose, retirement, like these are the things that you gotta consider. The risk, like, what if I don't have a tenant? If something damaged, breaks, like who has to fix it? That's gonna be on you, right? So the rental income that you are seeing coming could be less because now you gotta take care of certain things, right? So the RBM is just a strategy that you're not gonna have the same risk as the real estate, right? So you're gonna have other components that can help you not only accumulate wealth, but also activate the policy to get tax-free income for life.
And these are things, folks, that you can consider. I wanted Arnaldo to come in and show you the different facets of growing into a great relationship financially with money, with the resources that you have, getting educated and seeing the possibilities of having that money work for you in the future. And even to the point where you can go on beyond that. And I'm sure that he can educate you further on how to structure, right? They have estate planners and all those things that can help you structure that so that that money keeps giving your family throughout generations. Arnaldo, thank you so much, brother, for being with me, for sharing all that knowledge. I hope that everybody connect with him on LinkedIn, connect with him. He's on Instagram, on Facebook, he's on all the stuff. But connect with him and look at what he has to say, because the buck stops at you, right? What you do with your money, that's your business. But if you don't make that money work for you, that's also your business. And that's the business you're going to have to work with, right? So, folks, thank you so much for being with us today on this Aloha Friday Live. I want to thank everybody that was in. Thank you, Crystal, and anyone that was not able to chime in, but thank you for being with us. I want to let everybody know that we did reach the goal of 700 subscribers on our YouTube channel, but now we're asking to get to 800. So please, if you do not have or you have not subscribed to our podcast, go to YouTube at BTLW Podcast and subscribe and help us get to that goal. two things happen. We get happy because we got to the goal, but another thing is that we've had guests that are authors that have donated their books and autographed it for a lucky winner. And every time we get 100, we put 100 in the bin, and then we select one, and they get that book. The next book on the totem is one written by one of the Master Chief Petty Officers of the Navy, and he has donated that book, and he has made it available. So that is the next book on leadership that's available. I also want to thank Parade Deck for hosting us and streaming our show live. It is a content creator platform for military veterans, military spouses. So thank you, Parade Deck, for hosting us. Folks, thank you for being with us this hour. And we will see each other next week on another Aloha Friday Live to get you educated on leadership and something else. Thank you, Arnaldo.
Hey, Enrique, thank you so much. I had a great time, and I hope that everyone that, listen to our, information, take action and move forward.
All right. Mahalo, everybody. Aloha. Have a
Aloha.
safe weekend. God bless.
Yes.